Hello there, welcome to the Small Caps. I'm Nadine Blaney. Well, today on the program, international student numbers are up. So what does that mean for the education sector? Stephen Scott from PAC Partners has some companies to watch, plus a trading update. Don't go to sleep, it's Serko. Remember that from yesterday? It's predicting an increase of between 123 and 149% in total income. That's woken you up. Let's hope expensive haven't risen by the same amount. I think I'll ask him. We'll be joined by the MD in just a tick. So let's get to the small caps and the broader market up by about 0.2%. So yeah, that's a positive day following on from Wall Street. There's a bit of enthusiasm renewed, I should say, in the tech sector, and that's part of the conversation with Circo as well. But when it comes to the smaller end of the market, yes, still seeing some gains here too. The emerging companies index up by 0.25%, in line with the broader market. The small ords up by 0.6%, so some positivity reflected in those ETFs that track the smaller end of the market. Latin Resources, Aston Minerals, Dropsuite, Legend Mining, and Patriot Battery Metals. Patriot Battery Metals was just put on a list, and I can't remember the broker. I'll get it to you. Up by 9% off the back of that recommendation. Down, though, we've got Iconic Rare Earths, Next Science, and Titan Minerals. So let's get some news, shall we? OFX's FY23 guidance is unchanged, with net operating income up by 42% and turnover up by more than 12% to just shy of $10 billion in the third quarter. Meantime, 21Metals copper production is expected to be in line with 2022 forecasts. It's expecting production between 36 kilotons and 43 kilotons for 2023, and that's up from 2022. All right, we could go on with the news, but I'm keen to get to Stephen Scott from PAC Partners, because we're going to pick up a couple of conversations we had in 2022 and see where we're at for 2023. Stephen, hi. Nice to see you. I know that it's a busy time of year. Everybody's getting back to work, getting ready for reporting season. But I always think it's worthwhile revisiting some thoughts from last year as well. Now, we've got the ABS saying that we've got short-term education students on the up significantly.
Yes,
education, international students are back, it seems.
Yes, there are. So we are seeing a recovery in international students in Australia. So we're up to about 16,000. It's a quiet period of the time of the year. It's normally January, February, when school starts, in the middle of the year that they come in. But that's compared to 240 lonely students the same time last year. So we are seeing a recovery in international student flows into Australia. It's not fully recovered, but the ABS very helpfully put out monthly statistics around some of this, including arrivals and departures. So we're using that and looking at that.
And that brings me to a company that we discussed last year, which was, what was it? It was ABS Education, wasn't it?
No, we looked at two last year. We looked at iCollege, which has renamed itself to NextEd.
Okay.
The stock ticker's changed and their share price is consolidated, 5-for-1 from memory. So you'll see that the share price has changed on no news, just a stock consolidation. Mm-hmm. So that's one that has some leverage to international students. The other one is EDU Holdings, which is a smaller player, and it's more at the higher end advanced education, less English, more higher end student, student training, vocational training is where they both sit, both relatively different in terms of market sizes, but both beneficiaries of this increased student flow, which we talked about last year. It's continuing now, but very, very importantly, the figures are a bit behind. December and now January look as though they're clean months in terms of disease and problems with those students coming in. So I don't expect that the figures continue to be strong in a seasonally important period for the education industry.
And I know that that we're expecting to see nurse training in Australia being put on the roster as well.
Yes,
so there are a few key catalysts that could still come through in 2023.
So EDU is still waiting for regulatory approval for the Nurse Training Australia acquisition that it's got on foot. So that is an important catalyst, along with overall student numbers being improved. And with COVID trades, you've got to look at the degree of permanency in them. So, I mean, everyone's bought umbrellas this summer, but they probably won't next summer. So we're looking for COVID trades where the recovery is ongoing and sticks around for some degree of persistence beyond just really this summer.
Okay, so what is the risk assessment for both of these companies, NextEd and EDU?
Yeah, so NextEd has cash on a balance sheet, so it's low risk. EDU has medium risk. EDU has some debt and is much smaller, so it's a higher risk stocks. So both in the portfolio, the risk reward, viewers should be aware they do contain some risk, particularly around student flows. If we saw a pandemic, a breakout again, or we saw some regulatory change within students. The other thing that's curious, Nadine, is we charge a lot for visas. So a working visa in Australia is about $500. Other jurisdictions like Canada and perhaps other places are a bit cheaper, and we're hoping that the federal government might look at that. The cost of getting into Australia being reduced. We want those people to come. Why punish them? Let's try and make it a bit cheaper for them. That would be a positive too if that changed.
Okay, so do you anticipate in this earnings season that's upon us that we will see, big changes to expectations for these companies, for forecasts going forward, the guidance?
Both NextEd produced 4Cs, so we have a reasonable idea up to September how it was trading, and issued an AGM update in the later part of this last calendar year. So we're not expecting any major surprises, but I think positivity continues. But where the money is made in these stocks and is the medium term, and we think that holds in and looks strong and positive. And we think the sector will grow as a percentage of the overall Australian economy. So getting that medium term right, obviously you've got to get the short term right, get the background of the positive statistics, really helpful as an independent key point, but it's getting that medium term, longer term growth persisting.
And you've got confidence clearly in both management.
I do.
Yeah.
I do have confidence in both management.
Because I know that's important to you. Okay, so let's get to another company that we talked about last year. It's Beam Communications, BCC. So it was yesterday, the day before, upgraded its outlook. Why?
Trading update, positive trading update. A bit rare, these sorts of stocks at the moment. So expecting to get, it had guided roughly for about $2 million EBITDA for the full year. It's going to looks like it's going to get that in the first quarter, and its sales are going from 12.5 million to 20 million. The main reason, apart from this device we talked about, the Zolo device, is they're bringing out a new mobile Wi-Fi hotspot device used in things like boats and yachts. And it's going to be 35 times faster. They've already got an existing product in the market, This one's going to be faster and better, have new features. And you say, well, why would I want one of those, Nadine? What on earth would I want one of those? Well, if you're a fisherman, commercial fisherman, knowing the weather and the data closely is very important to you. And if you're a yacht trying to win a yacht race, there's actually software that tells you what the wind's doing. So we think the demand amongst all those super yachts and sailing yachts and even RVs, the fancy RVs, helps drive demand for this new product. And it's Iridium is about to launch it. They've sort of guided that it will launch shortly. So we think that will help drive Beam, and the Beam, some of the results include perhaps some of the early sales of those products. Okay,
and so not only that, but it's got an ongoing sort of royalty structure with some of its products as well. But this new product, that's my point, is it a high, like how high a price point is it if you're talking about super yachts and yachts? Because I'm thinking that could be useful for
$1.5 grand, $2 grand to see you out.
The RVers, the grey nomads will love it.
So it's a bit more expensive. What's happening down in the Zoleo product is that Apple have launched a competing function within their iPhone 14. But in America, we believe it's leading to a lot of false 911 calls or 000 calls where people are not really needing rescuing but are using it. And you need to acquire their signal with your phone, their satellite signal, to make the call. And I mean, if your boat's surrounded by a 5 metre shark, you don't really want to be waving a phone around trying to acquire a signal. So we think the Zolo still got an advantage in that market, but there is a bit of competition around in that device
so
market.
Has that changed your view on the stock? I mean, is this a buy? Give us the risk assessment as well.
Not at all. We're still very positive on it. We like this new product they're bringing through to market. So it is a higher risk stock, it is smaller, and viewers should be aware it has some risk attached to it. The big risk is some technological change or any disruption to the global satellite market, which sounds far-fetched and something out of a James Bond movie, but if the Iridium network was disrupted by perhaps a war, for example, that might be a problem for them. But Iridium don't play in the military market. They're a lower orbit domestic satellite, and they've for years and years navigated the political dynamics of their satellites passing all around the world.
Well, I love an update, and viewers also like updates on companies that we've spoken of before. So thank you, Stephen, as always. Nice to see you. Stephen Scott there joining us from PAC Partners, and he's got his work to do through and ahead of reporting season. All right, let's get to Serko. So yesterday it released a trading update, and it is all pointing to a stronger than expected start to calendar year 23. Let's get an update. Serko CEO Darrin Grafton is joining us now. Darrin, welcome to the program. Let's address the elephant in the room, which was the share price performance through last year. I mean, you've had a number of headwinds to deal with, but also just this extreme negativity toward tech companies, especially tech companies that are not profitable. Do you feel as if the tide is turning slightly?
Yeah, and I think it's all time on it. The only thing you can control through that period is actually execution, and I think that's one of the key things that we concentrate on. The difference with us is that we had to invest to build the technology to get the recovery that we're seeing, and so that investment is directly relating to the growth that you're now seeing in us upgrading our guidance. And so there's this thing about loss making, but we're not trying to find revenue. We've got contracted revenue and paths that we're going forward. So I think there is quite a difference that people are learning around what Circo does and how we're actually managing that. And we've got a very, very strong cash balance, and we don't need to consume all of that through to get through to profitability. So we're going to run through with a nice war chest at the end of this process as well. And it's been very tightly managed to how we're actually working through that sort of side of it. So you sort of get caught up in that whole tech sort of structure and sell-off, I guess that's happening at the same time. And our job is to prove we're different and that we're executing to the plan precisely.
Okay, how is the execution of the partnership with Bookings.com going?
Yeah, very well. And you can kind of see that from what we're actually doing. And it's a partnership where both of us have a plan that we're executing to bring about the technology that's needed for that business travel recovery. And it's a multi-year process of working through what we're building, how we're actually building the technology that will enable the right shopping to attract business customers into that overall platform. And we're continually seeing growth. And I think, we talk about that this guidance update was across all markets. The ANZ market is performing incredibly well, as we've sort of seen previously from our numbers. And Booking.com, we've seen a faster recovery in that January month that we normally wouldn't see. So it's exciting to see that we're not seeing the impacts of, that European gas crisis that we once thought. We're seeing a general sort of strong January that we normally wouldn't see.
I guess that speaks to some of the macro dynamics as well. We are seeing strength in the travel sector. Everybody wants to get out. Everybody's booking trips. Prices are quite expensive. Consumers are tightening their belts. Interest rates are rising. How does that trickle down to Circo, and how are you prepped and planning for that?
Yeah, and so as prices come down, then we get more trips. So I think it's a corresponding sort of thing. If you get recessionary aspects in travel, you get more people wanting to put our technology in so that they can actually manage travel compliance, and they'll get approval processes. And so we get more customers signing up. And then when we're in these types of conditions at the moment, you start to see that there may be less trips. So there's probably still another 20% of volume that can come on board as prices start to drop. So we'll start to see an increase in the number of trips being taken. And so you earn different money based on that. You might earn a higher transaction number because there's more trips being taken. And so the mix changes as markets recover in different areas as well. So it's quite interesting. We've gone through this previously through the GFCs and other sort of side of it when we've looked at recessionary aspects, and some of those were our largest customer growth curves as well. So it's really quite interesting at the moment to start to see how the markets sort of shift and these new emerging kind of trends in travel as well.
Yeah, I find it fascinating as well. But how about the user, what's within your control? The user interface, user experience, how to convert, convert these these transactions? Like how much of it is also within your own control through the technology?
Yeah, a lot of it is down to experimentation and user technology. So the user interface definitely has a huge part to play in how you actually can create what we call conversion. So that's someone that comes in and searches and actually book. We want them to have a great experience through there, and we do that via experimentation. If we change colors and label positions, so it is about creating a better mousetrap, as we call it, to really enable those people to want to come back. And there is a difference between a small business and a large enterprise that mandates the technology to somebody who's a consumer. That is a choice. You want them to have the best experience, to get the right price, and to want to come back. So we definitely have these two paradigms working together at the same time.
As far as the reality of investors wanting to see a pure path to profitability, they want to see costs under control. We know that big tech, at least in the US, is laying off. I mean, what's the headcount like and the expected headcount growth expected to be at Serko, and how does that impact your ability to control costs?
Yeah, so we've guided pretty precisely to the market what our thoughts were around how we're managing the business. And we said we were going to come up in headcount, and then we were flattening that, and we weren't going to increase that into FY24. We know that some of our weighting is around 10% of our workforce is in contractors, and how we actually look to operate that into FY25 will see us into a cash flow break even and profitability cycle, and we're operating month to month based on the revenue and the burn structures to get exactly to that, and we don't go outside those parameters, and we've operated through COVID and these periods exactly within those parameters. So the market should gain some confidence that we know where we're heading to, and we're executing maybe slightly ahead because we've upgraded the guidance, but we're very precise. We don't need we've actually reached full capacity in our hiring, so we're not looking to really increase the hiring, especially in the engineering capacity at this point now.
Now, just away from the metrics, which are obviously very important, the trading update has come through, well received by the market and some of the brokers as well. Darrin, what's exciting you about what's going on at Circo? Like, it's been a tough time on the optics side of things, but clearly you've still been hard at work. What can we expect? What gets your juices going every morning?
Well, I've always said I wake up because my passion is to see our technology used in 20% of the world's business travelers. And, brands like Booking.com help you achieve that sort of aspiration. And we've got a phenomenal team, and I think what gets me up is like what we can really do in this industry. There's not very many players in this space that can actually make a difference on the global stage, and we're one of them. And we're in 180 countries with Booking.com. We're in America, we're in Australia, New Zealand. We continue to win market share in our home markets. And it's really exciting to actually see the maturity of what was a local ANZ business dominant in its space go global, and taking the team on that journey and actually winning. It's really exciting. And for me, delivering on that vision that, is really about, can New Zealand and Australian businesses take on the world stage against some of the 10-ton gorillas? That's the exciting part. We're doing it, and we've got the backing of some great shareholders, and I really thank them for staying through us through COVID in this sort of period, because they've given us the capital to execute that, and I want to do everything to reward them for what they've actually supported us through there. So that's what really gets me up and driving.
Well, I'm glad you came to talk with us today, Darrin. Thank you so much.
You're welcome. Thank you very much, Nadine.
Serko CEO Darrin Grafton there joining us, and Serko's share price up a further, roughly 3% today. So a New Zealand tech company, ASX listed as well, that we'll be keeping an eye on for you as small caps continues. Not for now, though. We have to take a bit of a break. We'll be talking everything Web3, DeFi, crypto next. Stay with us.